Here's the uncomfortable truth most retail traders don't want to hear. Institutions like BlackRock, JPMorgan, and pension funds don't care about memes or 100 times coins. They care about one thing above all else: confidentiality. As one expert put it recently, you're BlackRock and you send JPMorgan money from one bank account to another. Would you want everybody to be able to see that? On fully public blockchains, it's all visible. On fully public blockchains, even if they don't immediately know it's your wallet, sophisticated on-chain analysis can often tie it back to you. Every transfer is visible forever. That's a non-starter for the largest players on Earth. They need privacy, or at least strong confidentiality, built into the system. Without it, they simply won't participate at scale. This isn't theoretical anymore. We're seeing major chains and projects realize that institutions won't come unless privacy is a given. Canton Network and others have already shown the demand. Now Ethereum is stepping up in a big way. Ethereum Foundation researchers are working on what's being called an institutional-grade privacy system, sometimes referred to in discussions as ETH systems or related confidential tech. Confidential transfers, private bond issuance, privacy-preserving identity solutions, confidential settlement systems. All designed specifically for big institutions who need to move serious money without broadcasting every detail to the world. Think about what this unlocks. Once institutions can move assets confidentially on Ethereum rails, the barriers drop dramatically. BlackRock can tokenize funds, settle trades, and manage collateral without the entire market watching their every move. This isn't about hiding illegal activity, it's about basic business privacy. Banks have had confidential transfers for decades. Crypto needs the same if it wants to play in the big leagues. And here's the beautiful part. This is happening on Ethereum, the same chain that powers most of DeFi, stablecoins, and tokenized real-world assets. Adding strong privacy layers doesn't replace Ethereum, it supercharges it for the next phase of adoption. Institutions have been dipping toes in crypto for years, but always with guardrails. They love the transparency for some things and hate it for others. We've seen experiments with private chains, permissioned networks, and various zero-knowledge solutions. But the real prize is bringing confidentiality to public, decentralized chains without sacrificing security or decentralization. Ethereum's approach, building privacy as an upgrade rather than starting from scratch, plays to its strengths: massive liquidity, battle-tested security, and the largest developer ecosystem. This isn't Ethereum trying to become a privacy coin. It's Ethereum becoming the full-stack infrastructure that institutions actually want to use. Let's talk about how this actually works without getting too nerdy. Confidential transfers use advanced cryptography, things like zero-knowledge proofs, so the network can verify that a transaction is valid. You have the funds, you're not double spending, without revealing the amounts or the parties involved. Private bond issuance means companies can raise capital on-chain without broadcasting terms that competitors could exploit. Privacy-preserving identity lets institutions prove they're compliant without revealing sensitive client data. It's the best of both worlds: the transparency the regulators like for compliance, plus the confidentiality the institutions demand for business. The bull case is massive. Successful institutional privacy tools could unlock trillions in new capital flowing into Ethereum-based products. Tokenized stocks, bonds, real estate, you name it. The network effects would be insane. More liquidity, more staking, more burns during high activity, stronger security. But let's be real, this is still early. Technical challenges remain. Regulatory clarity is needed in many jurisdictions, and not every institution will move at the same speed. There's also the eternal crypto debate: how much privacy is too much? We need to balance confidentiality with the ability to catch bad actors. The good news is, Ethereum's approach seems focused on regulated, compliant privacy rather than total anonymity. For regular holders like us, this is ultimately bullish. Institutional adoption brings legitimacy, liquidity, and long-term price support. Your ETH isn't just a speculative token anymore. It becomes part of the rails powering the next generation of global finance. We're moving from crypto for degens to crypto for institutions, and the privacy layer is one of the final missing pieces. The quiet truth is that the biggest money on Earth is waiting for crypto to grow up. Privacy isn't a nice-to-have, it's a must-have, and Ethereum is stepping up to deliver it. What do you think? Will institutional privacy tools be the catalyst that takes Ethereum to the next level? Drop your thoughts in the comments. I read every single one. If you want more deep dives on institutional crypto adoption, tokenized assets, privacy tech, and the future of finance, make sure you're subscribed and hit the bell. Next video, we're looking at another major development that's flying under the radar. This is signal and noise. The institutions are coming and they're bringing real money. Stay informed, stay curious, and I'll see you in the next one.